Hello, everyone, and welcome to our fourth episode of Fintech Garden. Today's topic is embedded finance, and let me introduce our co-host Dumitru Condrea, who will help me to dive deep into this discussion and see how it will go.
Yeah, thank you very much. And let me introduce my co-host, Igor Tomych. And today we have a very interesting topic. I will open a little bit of just, a background of a topic. We had a discussion with Igor, like what means an embedded finance? If you go on the market and you ask this question to different people, everyone will say like, yeah, we know what means embedded finance. But at the end, you'll hear different opinions and different explanations. What does an embedded finance mean? So let's start with this. Igor, what's your version of embedded finance? What does it mean?
I would maybe approach this from a technical side because I used to be an engineer and I still keep my hands a little bit dirty with the technology. And in my view, embedded finance is something which is leveraging modern technology as APIs and restructuring and using existing technical ecosystem to create new financial products, which were not possible to or were really hard to achieve before.
Agree. Embedded finance for me means when you take a financial product and add this to a non-financial application or web service, as for example, in e-commerce. A lot of people think that e-commerce and finance and payments are like the same thing, which is not. We remember times when electronic commerce was not equal to online payments. When on electronic commerce, you were just able to select products, not to pay for them, and you were paying using all the approaches. Second, it's a non-financial application like integration, non-financial application like, I don't know, ride sharing, taxi, food delivery, and much more. And this for me, this means embedded finance, the integration of financial services with non-financial applications or web-based services.
And I think we can take a look on this with the different angles, because while you've been given the description, you can do something which is kind of feels as the financial service, but in the end of the day, you are not interacting with the money flow or the cash flow. It doesn't feel like the real embedded finance. But I remember the applications in the United States for the banking, and it's pretty fun story maybe to share with everyone. You think technology is giving us an ability to be really flexible and you can do the transfers, but imagine the application from the big United States banks in 2016. You, even at this stage, you already have Revolut, Monzo, which is just coming to the market, and you have ability not just transfer your funds but also open an account. But if you take an application from, let's say, Wells Fargo, the trick is that you will have to go to the branch for opening an account, and you will open an account. And then you will get the login and password for logging into this application. And you will think, okay, then I will be I will be able to start the transfers of my funds through the application. And the answer is no. So basically, major American banks they developed the possibility to transfer, if it's not a fintech bank, like something which was specifically designed for digital era. The usual banks, they added this financial angle to their applications quite not a long time ago, like 2018 something ish, which is pretty fascinating me. So I would say that if we take a look on applications, the embedded finance can be this way: that you have non-financial institution which is utilizing the infrastructure and possibilities from financial institutions, but it can be vice versa. And the good example is Uber applications, because one of the speaker that I've talked about the embedded finance in United Kingdom, he said vice versa. It's embedded financing is when you have the super app, the marketplace financial application, which is embedding into the application non-financial services or even connected to the financial end as insurance. And I think we can even take this example. So non-financials, using financial services using non-financial services. But a third example in my head, at least, exists is when we are taking, uh, let's say, not the major or mass market players and having non-financial services implementing not a licensed financial services in their applications. And really good example is open banking, because we can actually take something from as a budgeted application and analyze the activity of the customer by aggregating their accounts and aggregating their transactions. But in the end of the day, we're not moving money. So we're kind of deriving something new which were not existing before on the market, because no one actually, you cannot think about like coming to, I don't know, an advisor and asking you to bring the list of the printed transactions from the bank. So by having the technology, we kind of having another third type of the embedded finance, which is deriving new business processes and new business models for digital products or digital footprints and approaches which were not existing before, by combining those two type of integrations. I think I shifted a little bit away, but it should be. And let me know, Dima, if it's clear and you would like to clarify something.
No, 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 it's clear. I agree with you. It's not a shifting, by the way. It's more like going into details. Well, I see on embedded finance more like a push up for classical companies to develop the digital services, or a motivation for companies not related to the financial world to embrace digital transformation and to increase the loyal increase the number of loyal customers. Well, internet gave to all of us gave the possibility of transform businesses, grow up the businesses, and so on. Fintech companies appeared, but they were still in this small lake of finance and business. I mean, small lake, small but very deep lake with finance and businesses. Embedded finance helped Amazon to become what we know Amazon. It helped Google to become what we know Google is today. And I know Chinese examples with Alibaba or companies from Alibaba Group. They absolutely, so embedded finance made a revolution on our market, on our lifestyle. Companies were delivering food, I don't know, Glovo, Bolt, wherever. They just now with 2 clicks, with using alternative payment methods, you receive the food on your door very quickly. But under the hood, there's a lot of processes. By the way, just read some of the report from McKinsey. Possibly there exists an expectation that in 2025, the total market of embedded finance, so embedded finance market, is expecting to be around $230 billion US. We are facing with basically it's a very silent, big revolution in internet.
But not really silent, because maybe it's not so super visible for the end customers, but on the B2B market, it's a hot topic. And I would like to comment a little bit on your Amazon
Mm-hmm.
shifting and growing with the embedded finance. I think in this case we can take a look, and I really into the speech from Bezos, like in late 80s or 90s. He gave the speech and he explained like why he started with the books with Amazon, because right now the Amazon that we know, it's like a really large corporation with a lot of businesses starting from, I don't know, cloud infrastructure, even super application with the marketplace. But if we take a look back into the history, the initial startup Amazon, it was just the bookseller.
Yep.
And Bezos is giving a really nice explanation why he chose to start with books as the first business. And he said, like, let's imagine that I would like to open the bookstore in New York, and I can rent the biggest like storage with the biggest shop that I can find on the market in New York, and still I will not be able to collect all the books in one place and sell to my customers. So if the customer is looking to have an ability to visit the store and find all the books that ever existed in one place, with the physical store, it will be really hard to achieve. And the idea for him was to create the online bookstore, which allows you to find any book that ever been printed and still sells. So I think here what is really a nice thing to acknowledge, that digital gives us an ability to scale with the values that we have never seen before in the physical world. Like if I would like to visit a shop, and if I visit the shop online, and in reality, the difference is that with online shop, I can list and I can see much more items that it's physically possible. So the whole interaction and the whole experience is shifting. And in this case, I think it's kind of, maybe it's a little bit in the nature of embedded finance, because instead of having the usual experience from the old school bank or approving the insurance or approving the loan, coming to the branch, bringing my documents, we actually developing and seeing the business processes were not physically possible before. And that might be one of the definition of the embedded financing, because we're taking the digital products, we're taking the digital data and combining them into the process that was not existing before in the real world. What do you think about that?
Sorry, before jumping to this, you mentioned Amazon. I mean, you developed a bit the story of Amazon, how they started. Remember the story of their very first customer from Bulgaria?
Yeah, no, actually, no.
No, you don't know. So the idea is simple. So they had a customer. One of the first customers of Amazon was a guy who told them, I need a book. So the specific thing you said, like you can find on that period, the idea was to find any ever published book. So a guy from Bulgaria wrote him, guys, I want this specific book. He provided the name. Can you help me with this? Like, yeah, we can help you. Can you ship it to Bulgaria? Yes, we can ship it to Bulgaria. And the guys from from Amazon, Bezos was telling, like, first question was how we will receive money, how you will pay us. Okay, no, not a problem. I will send it by envelope, classical way, all the time. And the Bezos was surprised. He received an envelope from Bulgaria with US dollars inside. I don't remember the numbers. And she was like, okay, so he shipped this. The example of how embedded finance scaled up his business.
Yeah,
Because
yeah,
you don't need anymore to speak with the customer. Hey, you're in Bulgaria or in the United States. How you will ship your the book? We can ship to you, yes, but how you'll pay us? Like, are you accepting Bulgarian leva or you use United States dollars or I don't know, Greek dirham, not dirham, drachma. So the embedded finance changed Amazon in the way
Yeah,
it looks
yeah,
today.
that's true. Once again, the difference between physical world, like if you have a local store, an issue is that you will have a possibility to serve only the clients who are physically can reach you. But shifting into the digital, and I think where the embedded financing also is helping, is to reach and penetrate the market that was not possible to do before, because you have an ability to collect money and then serve the digital services or even send the physical goods to the specific customer. So it's a good catch. Thanks.
By the way, so embedded finance is a perfect combination between um, the giants who have money and capacities and abilities to start something new, and some small companies or not small, but smaller companies that provide financial services that can embed their services into those giant products coming with agility, being agile, coming with expertise, how to react quickly and promptly to any kind of request. And what is good here, so this revolution is a win-win-win situation because the original product is developing, increasing the conversion rate and the numbers of sales. The fintech company who is coming with the solution, fintech solution, is winning because increasing the number of transactions and so on and so on. And the last winner and the most important winner is the final customer. Because sitting on the couch, you can order a Glovo or a Bolt or wherever, Uber Eats, and receive the food, and paying with your credit card, which is linked to your wallet phone, and just 2 clicks and everything is settled up. Absolutely nice. That's
Yeah, yeah.
my proposal was to switch, to move from this wonderful part where like everything is good, ponies and rainbows, like embedded finance, it's revolution, which is a good revolution, to switch to talent challenges and risks. So to see what we have under the hood. But yeah, well, if you have another question or idea, let's start with this and discuss that first.
I'm aligned with you. I wanted to jump into the complexity because
Okay.
if we deal it with the physical world, it's simple. Like you bring in the documents, I'm checking it, and then I'm granting a credit or a car loan, whatever. But the complexity with the once again shifting into the digital is the complexity of those interactions. First of all, which I think is really important, is identity thief, because the really first issue that someone approaching your business is this exact person. That's why we have liveness check right now in applications. That's why we have the KYC more advanced than it used to be in the branches. That's why we have
Mm.
IML, a lot of processes. So another downside, or the in contrary, like the case with the usability, is security issues, because if something is usable in the same way, it can be exploited for the security issues. And then even if we go further, is the complexity of the data, because if we're analyzing, like a good example of maybe embedded finance is a buy now pay later model. So right now we see a lot of companies who are growing this area, like Klarna, Twisto, etc., etc. And the complexity is to build your business process and build a really good understanding of your customers to make sure that you're serving someone who's eligible to, and not serve someone who's trying to exploit your business model and is fraudulently or malicious, is trying to use you. So it's another downside of this approach. Like embedded finance, the things are becoming much more complex.
Not only data privacy issues.
Yeah.
I mean, you're processing personal data of people. Beside the fact that you're processing the name, surname, email, phone number, you're processing hard information. So you need a good tokenization here and a lot of things. Yeah, and then a lot of non-financial risks. Well, for example, data privacy, by the way, is not a financial risk. So just to be honest, um, there is a risk. In previous episode, we're discussing about startups and big companies with regulatory compliance, and in the second episode also. So here comes regulatory and compliance. A fintech, what a fintech discussion without regulatory and compliance. So here you also face a lot of questions. Just imagine you are coming with a new idea on the market to embed something that was never embedded. Well, regulator can put you a ban or put a barrier or request some additional things to do. But embedded finance today is more like, or technologization of operations of banks and so on, is now more like an evolution of good old times where everything was done in physical, in a proper way, like face to face. KC verification today, Face ID verification today, is the same like it was in 30 years ago. The difference is that from the moment you entered in a bank branch at that time, you had no clue, but you were already KC'd. KC'd? How it's correct to be, to
Know
make
your
it a verb.
customer. But
Know your
it's
customer.
it's not. Yeah, but it's not really entirely true, because like I have a really interesting case of N26 coming into the UK market. And I think here another angle is a cultural one, because if you pass the KYC and N26, like we can talk in details. Like usually when you are onboarding in the digital bank, there is a specific process which is checking your liveness, like that you're a real person who is submitting the documents and you're matching those to those documents. And in different countries, it's done differently. Once again, it's due to cultural stuff. And in 20 and 26, actually, another person is connecting through the live chat and having the discussion with you. That's kind of reminds me the old good face-to-face discussion in the branch. But if you take a look on the startups and financial services in United Kingdom, it's done a little bit different. Like in on Fido, for example, they doing the the automated way where you have to read a specific phrase or move your head in the specific direction, which is defining that you are checked that you're the person and you're not using some kind of artificial intelligence services to fake your ID in this case. And N26 brought the same service to UK, like talking unexpectedly with another human being through your phone. And actually, it freaked out the people on the market. And that's why I think that one of the reasons why N26 failed in the United Kingdom. And in the end, they canceled this expansion to this country, though, so they're not operating there. And we need, and it's pretty, I would say it's pretty thin moment, like to understand how properly digitalize your experience, because we might take the same something the same that we had in physical world and put it into our mobile, but for certain reasons it will fail. So it's a good example when just copying and mimicking what we had didn't work, and didn't work with the large scale, because you can see Revolut, Monzo, Starlink, they happy and they're successful on the market, but other companies from other markets came, tried, and failed.
To be honest, I hate this thing when I have to communicate with someone. So I want to open a bank account in a new product, fintech product, and I have to pass this face-to-face verification with an operator. Because maybe I'm laying on my couch, and just with it some strange T-shirt, for example. You are now calling me. Oh, wait a second. Yeah, hello, yes, and it can be disruptive. But here, banks or financial institutions, or wherever they are choosing between customer comfort and and to be regulated. So sometimes it's better to put under a little bit of distress and discomfort your customer, but you will be regulated and you will not lose your business. Plus, it's very important to inform people like, hey, we understand your pain, but there'll be like 30 seconds video check to see if you're human, because and to, invent some funny message like, we are tired about robots, or robots invasion is coming and we are fighting with this. Make it funny. Make customer like, okay, let's do this. Anyway, exists also a risk that we didn't describe here, is the risk of customer trust. Do I trust? So I remember last year, my wife wanted something very specific to be ordered. Not expensive thing, but from some beauty thing. And I didn't find it on the original site, on the producer site, and I found it on the third party. I don't know, it was some kind of e-commerce. And I ordered it, and I paid it. And I told them, I was like, I found it. Like, you found it on the original website? No. What site? And I showed it. She was like, I don't know this website. Do you trust this website? Like, no, I mean, don't worry. In case if something will go bad, I'll just make a chargeback. That's it. But she she asked me this question. I was like, I will not risk it. I wrote them back, said, hey guys, sorry. I said, of course, I didn't write them like, I don't trust you, but I changed my mind. I want my money back. And so they sent me back the money, and they gained my trust, that website. So trust is very important. You have to build the trust with your customers, and the customers will. So for example, if I know how many customers know who are processing, I don't know, your money when you're paying in Amazon, or you're paying in some local marketplace? Nobody. Well, except maybe some professionals or people from the industry, but most of not. But about, I don't know, for example, in Romania is Yamag, there's Amazon everywhere, so on. So if I know Yamag or I know Amazon, I trust them. But if I'll find I will see a big name, acquires name on a site that I don't trust, I will not use those services. And then I don't care if there is a big acquired name there. I don't know. So customer trust is very, 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 very important.
Mm-hmm. And in this case, I've got quite an interesting question for you. Like, Another example of potentially, as example of embedded finance, is the brands. Because, like, take a look on Apple Pay or Apple Wallet,
Mhm.
because it doesn't bring anything new as a financial service. Is interconnecting the customers who are utilizing their platforms and connecting with the old school well-known banks who are issuing the cards, because even the card is not itself issued by Apple. And do you consider this as embedded finance? Like, if we're utilizing the platform to be a proxy for our payments, like Apple Wallet, Apple Pay, is it embedded finance, or yes or no for you?
Yes. But for Apple, by sure, it's yes.
Yeah.
You're bringing embedded finance to your whole ecosystem. 2 clicks and you sold, I don't know, headphones to a customer, where 2 clicks and you sold a game inside of your store. So, yeah, it's for banks. It's also can be an embedded finance, but they honestly don't care. Or for the issuing authority, issuing bank, because like you as a customer, as an individual, you have a card, or as a business, you have a card. We give it to you. We just don't care. You just take it, use it wherever you want to use. For us, it's important to see the token and to mark the token as trust. That's it. So we don't care. So for banks or financial institutions, or not financial institutions, for issuing authority is it's not embedded finance. For Apple, by sure, Google, it's or Samsung, it's embedded finance. But embedded finance, do you know that basically before the embedded finance, not so many people in our business were taking a look on the such kind of a metric like conversion rate.
Yeah.
So it changed our business a lot. We now have metrics that appeared only because of embedded finance and because of online payments also, and embedded finance conversion rates. So now embedded finance can increase your conversion rates as lower. So basically what companies are running for today is margin. They're running for cost optimization, which is also margin at the same time. Conversion rates, if you were speaking about payments, and acceptance rate, which is also the same thing with conversion, but it's a little bit sometimes separate. So conversion rate appeared, this metric as an important metric appeared because of embedded finance. Embedded finance changed not only our life, but also our business and our work. Basically, embedded finance are giving us, you, me, and a lot of people in our industries, giving the possibility to have jobs, and more and more new companies appear, more and more new products appear, because a lot of things need to be covered. It's impossible to be a big player, for example, and to cover all the niches and all the here. This is good for us and for our business also.
Okay, okay. Another metrics that I would add into your list is the average check, because
Uh-huh.
another fragmentation is if we're bringing a specific payment gateway or specific payment method which has another fragmentation of our customers, the average check might be better, because like everyone knows that IS customers is a different fragmentation of the customers. And if you're
Yes.
bringing the possibility to acquire Apple Pay, you potentially giving or taking another average check compared to your other instruments. And once again, the fraud level is decreasing,
Hmm.
because another issue is with the chargebacks and the frauds during the transactions with the embedded finance.
Well, chargeback frauds were available before embedded finance, but yeah, the number increased. And at the same time, sometimes with embedded finance, you basically, you as a product, you're doing a double KC, because first you have to be onboarded in the product itself. For example, I know you want to order food. At least there's a classical KC. You need to insert the name, your name, if you're willing to provide a real name, and you have to provide the address. And if you are using some of the products, embedded finance products you are using, you sometimes not only have to add credit card details, but also maybe you have to make the KC in the financial institutions who is providing this kind of services. And this can be also. So basically, embedded finance is a partnership. It's a mix of partnership and ecosystem. Where, for example, startups, they're using embedded finance, non-financial startups, they're using embedded finance to scale up their business. to scale up their presence. Established companies, for established companies, embedded finance helping them to develop new niches, new market niches, new directions, and they are with less money, they can develop their market, develop new customers, which is good because they pay attention to optimization and customer retention. Yeah, interesting because embedded finance, in the one side, it's very risky thing, but from another side, it's a very absolutely a new door for a lot of opportunities. If you are failing to make a proper KCKB in embedded finance, you can have quite a big issues, but at the same time, it can scale up your business like to the sky.
Hmm. I would say it's a crossroad because usually in business, there are like plain vanilla or straightforward business models like interchange fee or I don't know the fee structure for the cross-border charges and etc. etc. But there are a lot of business models which are built across the cross-border. Like you're combining two things from two different worlds, and then you're getting something new. And I think in this case, embedded finance can be taken a look like crossroad between data and ability to get the service in existing product, which once again gives us an ability or examples of super apps. I used to come to eShop and I used to buy certain things with a one payment. But then there is an ability to use buy now, pay later, which is another example of different angles of embedded finance because in one way I'm getting the new payment method in well-known platform for me because I already have an account, I already bought a TV, and I would like to, I don't know, buy a new phone and pay with the three installments. So a new payment method is embedded finance because like I'm utilizing something which didn't exist. And for applying for this buy now pay later and split into three installments, maybe this vendor would like to use and aggregate my transactions from my banking account and asking for authorization to read through the PSD2 initiative, through the open banking, read my transactions to give me the scoring and then find out what is the amount that I'm granted for the buy now pay later. And in this case, that's also an example of embedded finance because we are utilizing an existing customer account for aggregation, getting this information from one platform to another, and deriving something new, which you are not bank connected to because we're not utilizing your bank account, we're not utilizing your payment from this bank, but the information about you is kind of becoming a new asset, a new business line, if you can say. And that's a really good example because we are running from the boss cases. So it's pretty fascinating. And I think if we project into the future, we will see much more integrations and much more crossroads on the market to facilitate new business models and new user experience. Because another fascinating example for me is a banking ID. Like
Hmm.
digitalization come not only into the payment gateways but also to the digital identity because we all hate KYC because you need to have, and everyone hates from all the angles, maybe except regulators, because regulators loves the KYC process, but the company who needs to implement it hates because it has to pay for each check, even unsuccessful one. The customer hates because the customer needs to have the documents with them this time when the person is making the KYC. And it's kind of a bummer for everyone. But if we talk about digital identities, it's something which gives you an ability to have more seamless process, but in the same way more secure because instead of like showing uh, the photo or video of your document to the third party, you're basically saying, okay, I know this institution, I'm granting an access to read information about me, and they don't have an access to my real documents, but this infrastructure helps. And bank ID right now exists in Ukraine, in Czech Republic, in Poland, like different countries implemented it. And if we talk about even MENA region, it's mandatory. Like in Saudi Arabia, you will not find an issue with the KYC because everyone has a digital identity connected to the government. So it's pretty hot topic, and
Yes.
there are a lot of areas where we can evolve and get better services using this modern technology.
By the way, you were mentioning several times today about buy now, pay later. Buy now, pay later is a embedded finance product or it's a fintech product?
I would say it's a financial product because essentially, like, strip down the technology. It's the way how we interact with the money. Because I would like to buy something today, I would like to start using it, but I don't have enough funds or the willingness to pay in a whole right now. So in the first step, it's financial product and how it exists on the market right now in the digital form is embedded finance. Because if, as Igor, I would like to go to Klarna, it will not allow me to use installments. It needs to trade some information about me, about my behavior, about my financial assets to make it possible. So in the first place, it's a financial product, but another one, it's heavily facilitated by embedded financing process, which includes KYC, which includes the even cross data exchange with the other, like if I'm coming, I don't know, from some e-shop which I already used before and they have my history of the orders, uh, companies like Klarna, they getting this information and they making their decision about scoring and limits according to this information. And once again, KYC is one of the steps, which is also embedded finance because I will find out who this customer is by getting this information. And there are a lot of buy now pay later platforms who are utilizing Bank ID, for example. That's also really, really fascinating and kind of crossroad example, finance and technology.
Yeah, we'll agree with this. I mean, I think buy now, pay later is more, well, it's of course a financial product, but I was making differentiation between a fintech product and embedded finance product. So for me, it's more like embedded finance because exists a possibility that, so this product, buy now, pay later, existed much before embedded finance appeared. Basically, credit card logic is some kind of a
Yeah,
buy now, pay later.
yeah,
But because I have a feeling, because I see this product mostly integrated with non-financial applications, marketplaces, food, and so on. Somehow I have a feeling that it's more like embedded finance product. But this is more like a feeling thing. It's not because of a classification. I mean, proper classification. Yeah, it's interesting. Anyways, I think we tried to touch the topic of embedded finance today. We tried to develop it. It's so hard and so risky sometimes, and it's not so easy to implement, specifically because of KC or regulations. We need to have a clear understanding what's under the hood of this. I'm sure that embedded finance is the future. Once again, McKinsey said it's like 230 billions of US dollars. This will be the market of embedded finance in next year. I'm sure it will achieve such kind of results. But let's finalize our today's episode with tradition. We have recommending a book for a new week. So, Igor, what you'll recommend for the book for next week?
so for the next week, I would recommend AI Countries by Kai Fuli. That's an author that used to work with the Google China. And it's pretty fascinating because it's connected to embedded financing. A lot of things there facilitated by the data. So the data is the main blood. And Kai Fuli is saying that the data is new oil. So the countries who are knowing more information about the customers, country customers, doesn't add up. But anyway, the data is new oil, and I really recommend it. It's not so old, but it gives really good insights how certain things with the big scale gives us a lot of thoughts and information and even possibility to train AI and all the machine learning that we see nowadays trendy and used everywhere.
Well, because we are speaking about fintech all the time, so will come with a very classical name. So the book is called the Fintech Book. It was written by Susanne Chishti, if I'm pronouncing the family name correctly, and Janos Barberis. it's a very interesting book because it provides you a perspective. It's basically a handbook for investors who also want to start a startup in fintech. And I honestly recommend to read this book. It can be, by the way, you can read this book not like an entire book from page one to the last page, but to read it by portions. For example, I have a questions like to how to do this or that, and specific stage of your business, you can open it and you can find it, and you can read specifically one side of one part of the book, and it will be sufficient for you to solve some questions, or to at least to maybe to receive some advices. So I honestly recommend this book by sure to take a read.
Thank you,
Good.
Dumitru. It's really nice speak.
The same thing is for me, our dear audience. We are very thankful for you that you helped us. You stayed with us, you listened to us, and you're helping us with ideas, comments, and so on. Uh, Me and Igor, we are receiving a lot of comments in private, and we are super happy that people are listening us, watching us. Stay tuned. We'll come back soon with a new episode.
Thank you, all our listeners. We appreciate your time and being with us today. Thank you so much. Thank you, Dumitru. See you next time.
Bye bye.
Bye bye.